obligation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today on Stockbox is the Managing Director of Lotus Resources, Keith Bowes. Lotus is listed on the ASX and OTCQB exchanges with the tickers LOT and LTSRF. The company is primarily focused on a uranium project in Malawi. Welcome, Keith.
Thanks very much, Stuart.
Please, can you give us an overview of Lotus Resources, its projects and your current aims?
Yeah, sure. So as you mentioned in the introduction, Stuart, Lotus Resources acquired the Kalakira project, which is located in Malawi. It's a uranium project that was previously owned by Paladin Energy, and we acquired it off Paladin in March of last year. So it's actually an asset that is on care and maintenance. So it operated between 2009 and 2014, and in that period produced about 11 million pounds of uranium. It went into care and maintenance in 2014, effectively due to the drop-off in the uranium price, and has stayed in that current status until we acquired it in March of last year. And we're in the process now of doing a number of technical studies, feasibility studies, to look at the potential of restarting the asset in the background, of course, having seen the increase in the uranium price over the last few weeks.
Yes, the price increase is very positive. So what's your take on the investment case for uranium at the moment? Is the future looking brighter for the sector?
That's correct, yeah. I mean, we've been in the uranium space for about 5 years or so, have always been of the opinion that there will be some significant movement in the uranium price in the near future. So I think the presence of Sprott and their SPUT fund has been a significant kick over the last 4 weeks or so. And we've seen the uranium price move from around the $32 mark in the middle of August to as high as $51 about a week and a half ago or so, and has settled in around the $43, $44 mark at the moment. So that's a significant increase in a relatively short period of time. And we know when we listen to what Sprott's intentions are moving forward, they still have access to a significant amount of capital, something in the order of about $800 or $900 million still available to them to go into the market and purchase more uranium off the spot market. So our expectations is they will continue their aggressive approach, and you should hopefully see a further increase in the spot price over the short term. So I think that's one side of it, that Sprott's been doing that. But we also recognize, just from a medium to a longer term perspective as well, there's been lots of conversations amongst governments and policymakers and various companies talking about zero carbon emissions and what the future of energy looks like. And I think people have come to realize now that any conversation that talks about zero carbon emissions has to have uranium included in that conversation. Nuclear power is the only real zero carbon baseload energy source that's out there. Renewables are great, but they're not a baseload. They depend on the sun or depend on the wind in general. So there are some issues associated with that, while uranium itself is a much more consistent feed into the energy source. So I think that conversation's starting to happen. We've also seen this electrification revolution going on. We're seeing increases in GDPs, and any increase in GDP is normally associated with an increase in power demand. Electric vehicles are starting to have an impact as well in terms of total electricity demand. So we see a growth in the electricity demand in the world, and we see nuclear power being able to contribute to that as well. And then if you overlay that with the supply and demand issues that we're seeing going forward, even under really quite conservative assumptions, we would recognize there's probably about a 30 million pound shortfall of uranium in 2024, and that shortfall increases to around 60 million pounds by 2028. So the future looks good for uranium, and we're expecting to see the spot price to increase. And the prices that we're really interested in are the term prices, and those normally lag the spot prices by a couple of months as well. So we're expecting to see the spot price start to increase over the next 6 months or so.
Excellent. What is Malawi like as a jurisdiction to operate in?
So we're very, very comfortable in Malawi. This is actually the second project that I'm doing in Malawi. Malawi is a democratic republic. There was the opposition party came into power last year, and there was a smooth transition of power. So that does give us a lot of confidence and comfort working in the area. It's a very safe place to be. I myself am actually very, very comfortable walking around Lilongwe or walking around Blantyre by myself at night. There's very little crime there, and any crime that is there is normally petty crime. It is a very, very poor country, though. And we do know from listening to what the president has said, both to Parliament and to the public as well, is that Malawi has recognized that the mining industry is their new area of growth. And they're very, very supportive of the mining industry moving forward. And in fact, the government of Malawi actually owns 15% of the Kalakera project. So they're very, very supportive of it restarting so they can generate revenues and those types of things as well.
A good situation to be in. So what's the roadmap then for advancing the Kalakari uranium project now that market conditions are more favourable?
So we announced to the market in October of last year a scoping study for the restart assessment. And that scoping study was really based on the assumptions we would operate things in exactly the same way that Paladin did, just to give us a really solid base case moving forward. But what we did from that scoping study is we did a lot of sensitivity analysis around the discounted cash flow models to really determine what were the key cost drivers and the key value drivers for the project. And based on that work, we've identified a number of areas that we think can have a significant impact on the project. So these are things including ore sorting, power supply, acid recovery, and tailings dams or tailings disposal. So we've been working on those 4 various areas to try and get an idea of how we can improve on them, with the idea that the results from those targeted studies will be included in the feasibility study that we recently announced has just started. And that feasibility study will be completed and announced to the market in the middle of next year, so sort of June or July next year. The expectations is that the uranium price will be at a better level by that point as well, and we'll be able to go and start to negotiate things like debt or equity financing for the capital raise required. I think it's important to note that it's a relatively small capital number for the project. Because we're only refurbishing the processing facility, we're looking at a capital restart of around $50 million. So we don't see any significant issues with being able to raise that capital. And at the same time, while we're doing the capital raise, we'd also be going to the various utilities in terms of trying to get offtake agreements, such that by the end of next year, we should be in a position to make a final investment decision, and then we can move ahead with the refurbishment of the plant, which we know takes us about 12 to 15 months to do. And all going well, we could be up and producing uranium by the first quarter of 2024.
Superb. You've also recently announced you've been exploring some rare earths on the site. Can you tell us a bit more about this?
Yeah, so that's a real interesting one for us. Obviously, it's not our primary focus, but some of the results that we've seen have actually been quite impressive. So we do know that Paladin Energy, when they were doing their regional exploration program some years ago, identified this rare earth anomaly. We went back there last year, did some of our own work, which included some geophysics and some mapping and some trenching. From those trenches, we took some composite samples, which we sent off for assay, got some really high-grade material. We were getting our total REO grades of up to 16%, averaging about 8% in the mineralized samples. And importantly, within that assemblage of the rare earth oxides, there was a lot of critical rare earths, and specifically the neodymium and the praseodymium, which we know together with terbium and dysprosium are used for making permanent magnets. And permanent magnets make up the majority, about 90% of the rare earth market. So I think there's something there that's really, really interesting for us. We've got some drilling going on there at the moment. We've done some more trenching as well. And once we understand the size and the extent of the mineralization, we'll then be able to decide the best way to crystallize value for the company from it. But as I said in the beginning, we're primarily uranium focused. The rare earths are just a little interesting thing we're having a look at the side to work out how best to get the most value from it for Lotus.
And finally, can you give our listeners 3 reasons to consider investing in Lotus Resources?
I think the first one is it's a proven producer. So we know that the Kalakera asset, as I mentioned previously, operated between 2009 and 2014 and produced 11 million pounds. So it's a past producer. When we go out to negotiate contracts with the various utilities, there'll be a level of comfort from their side, knowing that it's a plant that's produced, and in some cases they've actually processed or treated the product from Calacara previously. So we think that gives us an advantage over some of our peers. The second point I would say is the low capital cost. As I mentioned, based on our scoping study, the amount of money required to refurbish the plant is sort of $50 million at the moment, and that's $50 million US. So relatively easy for a company our size. We're trading around $320 million at the moment, our market cap. So we should be able to raise that capital fairly easily. And then the third thing I would say is that, Africa and Malawi, Malawi from our perspective is a very, very safe place to be. And we don't see any issues with restarting the asset there or any political problems associated with it. And then I suppose just as a fourth thing as well, it's also important to recognize we do have most of our licensing in place. We have our environmental license. And we recently announced that our mining license has been extended for another 15 years as well. So from a licensing perspective, we're also in very, very good shape.
Superb. Well, many thanks for your time today, Keith. It's been very interesting, and I hope we can catch up again soon for an update. Thank you.
Thank you very much, Stuart.
You've been listening to an interview with the Managing Director of Lotus Resources, Keith Bowes. You can find Lotus on the ASX and OTCQB exchanges with the tickers LOT and LTSRF.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.